Hi, I'm Jenny Brown, and this property investing tip is about property analysis. A lot of people don't know how to analyse their current property portfolio, so I'm just going to give you 4 quick tips of things to consider when you're looking at what you already have. You should know how to work out your returns, and you should know how to assess all this already, so we're going to assume previous knowledge. The first thing is interest rates. What will you do if interest rates rise? How much will interest rates rise before you're in trouble or your property portfolio is going to give you an issue? So if it's only 1%, then you really need to think about, for example, what you're going to do, because it's highly likely that interest rates will increase. Okay, so that's interest rates. Market conditions. Last year we had the global economic crisis and we had, unfortunately, a crash in the property market. It's highly likely that we'll see another crash. That's just history, and it repeats itself and it goes over and over again. So what will happen to your property portfolio if the market does go down again? You need to be prepared for this, and you need to work out how much you can afford for it to go down by before you're in trouble. The third thing is rents. Rents go up and down just like markets do, and it's very naive and unwise of us to think that we're just going to continually be able to put the rent up. The other thing that happens with rents is that if there is a problem in the market, then people move in together and we're more likely to have higher vacancy rates, which drives rental rates down because landlords can't afford to have their properties vacant, so they lower the rent to get someone in to pay at least something. So, you know, if anything happens in the market, it's quite likely that rents will be driven down. So, if rent was driven down, how long could you afford to keep your property if you've got a property portfolio that is dependent on rent? The fourth thing that affects a property analysis is what happens if you are unemployed, or you get ill, or someone in your family is unemployed or gets ill, and you have to suddenly have a loss of income towards assisting you with your property. Now, all of these things can happen at once, they can happen individually, and there might be 1 or 2 that happen at once. But any of these factors will affect your property portfolio, and you need to have some contingencies in place and some plans as to what you're going to do if any of them happen. So when you're analysing your property portfolio, take this into consideration, work out what your borderlines are, and then work out what it is that you're going to do if you're very close to reaching those borderlines. This free property investing tip is brought to you by Jenny Brown, and there's heaps more like it at the URL shown on your screen now.